Hello, TheoTraders. Here's the weekend report for Saturday, April 9th. Let's go around the horn on a couple of markets. Now, what I've got is my fractal view here with the monthly, weekly, daily charts. This is something that I'm doing more and more during the afternoon sessions during the TheoChat sessions. So, again, my name is Doc Severson. I'm on at 3 p.m. Eastern Time, 3 to 4. And one of the many sessions that we have on during the day now. So I hope you're getting a chance to tune in and just hear what we're saying. So if you can't tune in, don't forget that each one of these is archived. And you can always go back and watch what happened during that day. So as I look at the monthly chart here on the full S&P, we're in a strong bounce off of a lower low, but so far this is just a lower high. And you can also see on the weekly chart that this is coming up to kind of some difficult resistance overhead. So I'm going to be selling into any move that comes up to about the 2080 area. Now, one thing that we have to repeat over and over again, and we kind of have to remind ourselves, is that markets don't move forever in one direction. It may seem like it when you're going through it. So in other words, when we had that sell-off back here in January, it seemed like every single day the price was going lower, wasn't it? I mean, every day you'd wake up in the morning and check the futures and they'd be down 30, 40 handles, something like that. It was very difficult to go through if you'd never been through something like that before. And it seemed like it would never end. And next thing you know, you open your eyes, you take your head out of the sand, and the price is 270 points higher. How did that happen? Okay. So what we're going to do is eventually, this is one of the first weeks that we've actually seen just a little bit of selling coming in. A little bit of selling coming in since the bottom here. This was pretty much a flat week, and this week has been slightly down. If we look at this more on a daily chart, this is more of just a very gentle little pullback here as we're anticipating earnings, which are coming up starting on Tuesday. Now, I think we all know how this game is played, is that everybody that reports in the quarter tries to sandbag their numbers. So they say, oh, this is going to be terrible quarter. I can't believe I can't believe we're staying in business. It's that bad. And then all of a sudden they come out in the earnings confessional and they blow away the numbers. And so, of course, all that short interest gets squeezed out to the upside again, and we go through another gap and run. And this happens 4 times a year, over and over again. Nobody seems to learn the game. So what I'd love to see happen from this is perhaps, since we have such low expectations for this first quarter earnings for 2016, we may see a surprise to the upside, but I don't know how far that surprise to the upside is going to be able to go. Now, just because I have a trend line on here doesn't mean that there's some invisible force field that's set up on the price that all of a sudden it hits that level and it must go down. There's absolutely nothing that is going to prevent the price from going higher. However, a lot of times, because people do see a trend line on there and they see the levels that the trend line represents, it's sort of, again, the expression is, in a sea of sand, one single flag that stands up becomes a target. So this happens with gaps, this happens with trend lines and other price levels where we can start to see some overhead supply kicking into here. Either people are taking profits into that or they're waiting to sell into that level. So personally, what I'd love to see is at least an initial move higher on, oh boy, we're going to be surprising to the upside. And then what happens after that is, just from a contrarian standpoint, I'd love to see the price pull down again. I'd love to see the price pull down again because, again, charts can't go forever in one direction. The more vertical that they go, as they approach infinite slope, then the more unstable that they get to be because people are chasing after the price, and that always ends poorly. So just from a perspective of sustainability here, I'd love to see the price pull back maybe to somewhere as far as the 2,000 level on the S&Ps. That would be a significant pullback. That would definitely catch everybody's attention and raise the fear level and the implied volatility level. And as an option trader, that's a good thing because that's something that then I can sell. So if that does occur, that's going to be a very aggressive sell that I'm going to be very aggressively selling that to the downside. So that's where I'm going to be setting up cash secured puts. I'm going to be setting up bull put spreads. all kinds of different ways to create positive theta for our positions. Now, what happens after that is extremely important, because if we bounce, and undoubtedly at some point we would bounce from that level, if that creates a new high, then that increases the odds that we were going to see this breakout to the upside. We're going to see new highs in 2016. I know. Can you believe it? Would that possibly happen? Could we have possibly said that 2 months ago? Probably not. Am I saying that there are going to be new highs going forward into 2016? No. Listen to what I'm saying here. If we break higher, if we set up a higher low, and if it breaks higher from there and makes a new high, then the probabilities have increased for new highs into the year. But the converse of that situation would be is if the price bounces from this higher low and fades at this point, then what we typically see is that lower high creates a very nasty selling situation. Because what happens is bulls jump on board here, the retail bulls jump on board, and institutions sell into that move, and it's got nowhere to go. The retail bulls cannot drive this higher. And so it just becomes a situation where everybody is scrambling like crazy to get out on the way back down. It's the opposite of a short squeeze. So what happens in the markets over the next 2 to 3 weeks here, I'm going to be particularly interested in, because that is going to set the tone for the rest of 2016, I do believe. Once we get past this very important inflection point that I've been talking about now for the last couple of weeks, we're going to know what this market wants to be when it grows up into the end of 2016. So that is the S&P. I mean, if we look at the other charts, if we look at the Russell has gotten spanked. And the Russell is still in a flow on the weekly chart here. It's best seen on the weekly chart, a series of lower highs and lower lows. And this is no more than just another lower high so far. And if we want to play games with trend lines, we can certainly do that. We can come along here, draw these trend lines, and we can see that the Russell still has a long way to go before it's going to fix this market, right, and start to go higher. A lot of what was happening with the Russell is that a lot of these small cap companies were in the energy space, like in drilling and shale recovery, things like that. And they just obviously have gotten spanked since the summer of 2014. So this is why the Russell, I mean, this was an epic failure here. When we have this much consolidation happening on the monthly chart, think of this as like a spring being wound up, like coiling up energy here. Linear moves like this take energy out of the market, and sideways moves like this restore it. So we had an upside breakout and it failed. It failed miserably. So this is about as bad as it gets when you're talking about an upside breakout that fails. Right? So we're still in a very negative environment on the Russell. However, what would change that is if the Russell's able to do something like this, pull down, and then slingshot higher, break above this trend line, and that combination of a higher low and a higher high with a new uptrend gives a change in polarity on the weekly chart. We'll start to see this drive higher from here. We could actually start to see money coming back into the Russell if that were to happen, right? So we kind of have the roadmap here for what the Russell would have to do to fix itself and to become a more bullish chart, okay? But until that happens, it's not going to, until we see that significant higher low, we're not going to see any kind of reversal. Here is the NASDAQ composite. Now, I don't want to get too much voodoo here. Okay, but this is what you call a broadening pattern. Okay, so think about this. We had a nice kind of quiet little uptrend going here, you know, almost straight up in 2013, 2014. And then what started to happen is it started to become more unstable. For those of you that have ever been driving on ice before, if all of a sudden your back end kicks out and all of a sudden you start going down the road and all of a sudden the back end kicks out and you correct in the opposite direction, however you correct a little too far, and next thing you know, you got your back end kind of going like this. This is called an undamped oscillation for those of you that were once in engineering and are probably doing something else now, like me, right? So this is what we're seeing here is an undamped oscillation, and the in the NASDAQ chart. And this is kind of a bearish signal because you're seeing instability. You're seeing more realized volatility coming into the chart. And again, I don't want to say this is an absolute, but typically this is a sign of instability and ultimately is a bearish resolution to this. So for this thing to get out of this, it's got to get back into more of a stable type of market. So again, listen carefully to what I'm saying here. I'm not saying that this is a bearish, that this is absolutely a bearish pattern, however, but for this to fix itself and get bullish again, it's going to have to come in and start to get quiet again. Start to do that quiet and trending type market action and stop this flailing around like this, because this is extremely unstable. And typically when we see this, that's the operative word here, typically when we see a broadening pattern like this, it resolves to the downside. Okay, so watch that one carefully. Let's look at the Dow. The Dow is not going to be all that different from the S&P. The Dow and the S&P are kind of the same place here. It's running up against this trend line. Same comments there. So now let's go over to a couple of commodities. I want to look at gold and oil. These are the ones that people seem to want to look at right now. Now we do have something interesting happening in gold, kind of to my point. All right, if you look at gold, so there's two things that we can look at on this chart in gold. Anytime you see a market that's going absolutely vertical, where the slope is nearly infinite to the upside, rise over run is nearly infinite, then this will end badly, because this is where people are chasing after it and the supply demand gets inverted and all of a sudden lower high, and it's just death from there. So this has been in a bear market really since the 2011 time frame, with lower highs and lower lows. So now on the monthly chart we have a higher or a lower high setting up here right now, a lower high setting up on the monthly chart. So this is getting everybody excited, because all anybody does is look at the daily chart, and if all you do is look at the daily chart, you're looking at this going, oh my gosh, it's the new bull market in gold. Not necessarily so. It depends on your context. If you look at the monthly chart, you see it as just a little blip higher, okay, and maybe that's just another lower high setting up. So what would have to happen for this thing actually to reverse and to get me interested in going long on gold? Well, we have some elements of this that I like, which is okay, so all these lower highs, lower lows, lower highs, lower lows. Okay, we've gone and punched above the recent lower high. That's good. Check. I like that. Okay, so now what has to happen is this has to pull down. Whenever it does pull down, and it looks like it is right now, this has to print a higher low, and maybe it's going to print that by 1200. Maybe 1200 is going to form support here, and it's going to come down here and then go off like that. Then we have a change in polarity. We have a confirmed change in polarity. Things are looking better there. So all that's going to do on the monthly chart is just pull this dude up like this. That's all. Okay? Still haven't changed trend. What has to happen on the monthly chart is that too needs to go through this whole rinse and repeat process of pulling down to some form of higher low and then a higher high. And then I'm going to get more interested in that. Okay, that's the beginning of something that could be something really big. You know, if we start to run into a monthly uptrend in gold, that's going to attract an enormous amount of attention, and that could move, especially with all the short interest down here. This could really move. Let's do the same thing with oil and finish out this report here. So kind of the same thing with crude oil, right? You know, we've seen, if all you do is watch the daily chart, you're seeing this coming up on the daily chart and saying, it's a new bull market in crude oil. Where could it stop? But if you're also looking at the overall context of what's going on here, this is just a wee little bounce off of the bottom, and more than likely just going to create another lower high. Okay, this is not going to change the trend all by itself. If all you do is watch the daily chart and wonder why you get whipped around left and right, this is why. Even even the weekly chart is showing a series of lower highs and lower lows. That has to change. That has to change by printing a higher low first and then a subsequent higher high. And that would probably help if we got through this trend line here. You know, getting through this trend line would probably be something that would help the crude oil get over that. So again, this is one way to look at a different series of charts in here and get a better context of what's going on. This is what I call my fractal series because they're off by a factor of 5. Monthly, weekly, daily chart, they're all separated by approximately a factor of 5 from each other. The daily chart's 5 times faster than the weekly, which is 5 times faster than the monthly. So these interrelationships kind of give me the context for what's going on here and allow me to kind of frame things in so I know what would have to happen in the charts for me to become bullish on something longer term. Or when can I evaluate something that's just going to be a short-term opportunity versus something where we need to really back up the truck and do a position for maybe multiple years. That's the difference here. So I hope that helps. And again, if you have any questions on this, please reach out to me during the chat room during the days. Again, I'll be on this week for my second week at 3 o'clock Eastern. Hope to see you there.